David Morgan with you with the morganreport.com, May 22nd, 2020. Well, as I normally do, let's start off with the stock market. And both the Dow and the S&P showed strength earlier in the week, bouncing off their 50-day moving averages. We're still seeing a high-level consolidation. Are we topping and ready to see a sell-off? Remains to be determined. It certainly can be interpreted that way, but the market can wear you out, as we all know. So I'll leave it at that. So far, the market has not signaled that it's going to show any further weakness. It will, at some point, in my view, come down. But right now, it's topping and going sideways. As usual, I did several interviews this week. I did, as you can see, I'm on the blog. There's one I did for a German audience. And a lot of the questions I'm getting about this Basel III Accord that makes gold a Tier 1 asset in June. I have looked at it pretty hard, and to me, it seems as if it's not going to be a huge event. Many people are saying so. I really have a tough time concluding that it'll have any effect on the LBMA silver position, for an example. It's about gold becoming a Tier 1 asset. Silver isn't even mentioned in it, so I don't see that connection. Further, it's going to widen the spreads for borrowing on gold, and it may drive some of the big players out of the gold market. For example, that's called their desk, their trading department with a large, let's say, investment bank that has, 5 people at the desk, 10 maybe. And they really see what the net is to the overall investment portfolio with a gold desk, and maybe just determine, as some have already, that it's really not worth it and that department goes away. So I'm not really forecasting that. What I'm saying is that it remains to be determined, in my studied view, whether or not Basel III will have an effect or not on the market. I think the effect is going to be wider spreads for the physical market, but we'll see. Next up is from FX Street. Fred Bostic worried about inflation getting entrenched. Federal Reserve President from the Atlanta Fed, Raphael Bostic, noted on Friday, right now the dashboard of inflation is not flashing red or suggesting things are getting out of control. If we see good progress and the economy can stand on its own, I'd be in favor of getting more normalized policy. Of course, that's applying interest rate policy. I'm in a bit of a quandary. I can certainly make an argument that inflation has started. That's obvious. Secondly, that it will continue. However, there are deflationary forces out there as well. So it's sort of a tug of war between the both of them. Stagflation is an easy cop-out, but it's really accurate. We're going to see higher prices again, as I've said in the past, in things we need: food, shelter, probably, energy, everything that basically is needed for human existence. And we'll see deflation in areas like electronics, software, and other areas that are not as needed in society. So again, it's a tug of war. I do believe that we're going to see higher inflation, certainly in food, and most people aren't going to stop to analyze whether or not that's based on a supply chain breakdown and a shortage. They'll just see higher prices. So again, the turnover of money, the velocity, where the money supply is certainly sufficient to cause higher inflation going forward. It's all about how much of a turnover rate there is, how much money actually fuels the system. I remember later in the inflationary cycle when I was quite young, and I had, I think, my first or second corporate job. Everybody I knew was going to the credit union and getting a signature loan for, let's say, 9%, because inflation was 13%, and putting that money into some kind of a hard asset, precious metals, maybe a property, something along those lines. We're not seeing that now, but we are seeing the start of it. So again, a tough call. I'll watch the markets, and of course you will as well, and we will see what lies ahead. Once it starts, it's pretty difficult to take it back, but we'll have to wait and see. And this is some note. This is existing home sales are starting to decline. It's been a big move from the cities into rural properties. I know firsthand since I live in a rural area, and I've witnessed properties getting bid to unbelievable levels in some cases. In Idaho particularly, some in Washington State, but particularly Idaho is known to be one of the safest states under the current conditions. And however, on a net basis, we're seeing existing home sales declining for the third month in a row. So the market is starting to cool off, at least in some areas or on the aggregate. My friend Mike Maloney from goldsilver.com did a couple of videos this week. Who really owns America's gold, part 1 and part 2. I would suggest everyone that follows my channel certainly taking time to listen to both parts. It's quite interesting, the amount of back and forth between the Fed and the Treasury on who owns the gold. Mike goes through it kind of with a fine-tooth comb. I won't elaborate, but it's quite interesting that even though most of the authority figures really downplay gold, they still own it. What's also interesting is Mike acknowledges that the current price for gold, I think, is $42.22. Let's not forget those 22 cents. And this was done, I think, in 1974. So my take on it is this. The U.S. was devaluing the dollar against gold. So in other words, the dollar price of gold was going up. But then they realized that continue to do that, it would basically be the man behind the curtain open season for everybody to see and understand what's really going on. We're depreciating the heck out of the U.S. dollar. So they stopped. And so again, officially on the books, gold on the books is at $42.22. And of course, the market price is over $1,800 USD. So, and can gold fix the problem? And the answer is not really. I mean, there has to be more integrity in the system. Gold is a good policeman on the currency. There's nothing that's superior in history. I won't say it works in the future as a gold coin standard where there's really no hypothecation. Either you have the gold or you don't. Could you build credit around that system? The answer, yes. However, I don't think we're ever going back to anything like that. We could have some partial backing by gold, which was what we've had the most recently, and probably if there is a tie to gold in the future, that's probably how it will be used. Well, talking about silver, first of all, this is the Wall Street Silver Reddit page. A quick mention, I will be doing a series of interviews with the Wall Street Silver group on an individual basis. Some of the people that write on Reddit have some very, very interesting things to say and really aren't well known to the silver community. I have asked to be able to come in and ask permission or invite them to do a chat with yours truly on the silver market. And it looks like it's going to be a go. So it's going to be kind of on an experimental or trial basis. Hopefully it will take off and it will be something that people enjoy, especially the new blood, I'll call it, people like Happy Hawaiian, and there's a few others that are quite well known on the Reddit group and certainly have some good insights in the silver market. I really admire the creativity of this group. I mean, some of the things they put out are just not only thought-provoking, but funny as well. And so I think it'll be a lot of fun to be able to interview some of these people. There will be some just back and forth with some of the more well-known people that are involved with Wall Street Silver. So that will take place as well. It's going to be kind of on a random basis. We're shooting for about every other week, so twice a month. And once that's done, just if you're on the free email list at themorganreport.com, you'll be getting an email on how to watch these interviews as they're being done. They may be done live, probably not. They'll probably be recorded and edited and then posted. So I'll finish up. Gold is certainly showing strength here. Looks like it's done a sufficient job to break out. And on the commitment of traders, it's got plenty of moves to the upside from here. Silver, on the other hand, failed to breach the $28 level substantially. It's fallen back. The commitment of traders is not very favorable to the silver market. So gold leading silver at this juncture is not a big upset. I think that's obviously what's happening at this point in time. Silver will probably have to consolidate somewhere, probably below this level, and then reassert itself. I have every confidence that it'll do so. So a couple things to mention. Number one is that Jeff Christian of CPM Group, New York, will be doing an open forum interview with the Happy Hawaiian, which was basically one of the people that started the whole silver thing on the Reddit group at Wall Street Bets that moved to Wall Street Silver. And then I'll be doing what I said. And also the silver market is certainly getting a lot more of attention. The Wall Street silver people have put up several billboards around talking about the silver squeeze, the merits of owning silver, and I will leave it at that. There's a lot coming through the rest of the year, and stay tuned. I'll be back with you next week for another weekly perspective.